very much a high-level helicopter overview, but feel free to read through it in your own time. I think it came out about 12:05 this morning from James, so you can download that if you're on his email list or see him after this. So the purpose of the Kidworth case study is to identify ways to increase productivity and attract capital to the broader agricultural industry. This specific case study, or the Kidworth case study, focuses on beef producers, but it's fair to say that the same challenges are also prevalent in the lamb, wool and cropping enterprises today. Between James, the AFI and Bentleys, we've tried to make this case study as relevant as possible and build on the original Kidworth case study from 2014. The Kidworth case study throws up issues which most agricultural businesses have been through, and particularly in the last 15 years. As accountants, we see these issues time and time again, but it's fair to say the Kidworth partnership is going through what would be described as a perfect storm of drought, debt, and potentially family division if the succession planning issues aren't sorted out. So what is the case study? Well, the Kidworth Station Partnership is a family-owned and operated beef enterprise in central Queensland. The family business is made up of mum, dad and their daughter, all of whom are actively involved. The business operates on around 25,000 hectares with a carrying capacity of around 4,000 head. The majority of the turn-off each year are sold to feedlotters and restockers. To give you a bit of a snapshot of how the business has performed, from 2002 to 2005, the business was going through what they termed the once-in-a-century drought. And most of us will remember many in Queensland went through the same drought. The Kidworths, however, maintained their core breeding herd during this time by seeking adjustment elsewhere. In 2007, the family made the decision to buy some more country, improve efficiencies and increase scale, and most of this was funded by debt. You'll also recall 2007 was the peak of property prices in rural Queensland. The period from 2008 to 2011 saw 3 to 4 good seasons in a row, which allowed the Kidworths to maintain the cattle numbers and make some property improvements. 2011, the family partnership had the highest head on hand at 4,500, and the business had a relatively healthy proportion of equity at 70%. This is despite their property being revalued down in 2011 due to the depressed property market. Moving to 2012, and the business moved back into drought. Despite the Kidworth partnership initially setting out to retain stock and feed as required, they were forced to sell the majority of the herd, causing considerable erosion of equity in the business. 2013 sales were less than half of 2012, and 2014 saw sales fall by a further $100,000. Moving to the 2015 financial year. The business holds its lowest equity percentage ever, still at a reasonably healthy 60%, and Ben and I can attest to that's quite healthy for something considering what sort of books we're seeing. Kidworth Station did manage to receive some rainfall during the year, and as a result, a further 500 cows and some calves at foot were purchased. The huge oversupply of cattle in the past 3 years has also meant the Australian cattle market has begun to improve, and this is also shown in the pricing metrics used in the case study. But this did two things to the Kidworth's business. Number one, it improved equity as the herd value on hand improved in value, but it also meant the cost of repurchasing stock crippled the business's cash flow. The business has now been cash flow neutral or negative for 4 out of the past 5 years, which is very common across rural Queensland, and the Kidworth's financier has now given them a mandate to return the business to positive cash flow within 2 years or otherwise face some serious ramifications. The Kidworths have provided their bank with a forecast for the next 4 years and based on improving seasons, expect to return to cash flow positive returns by 2017 and have their herd back to around 4,000 head. The Kidworth family are committed to staying within the industry and believe in the story of growing demand for Australian beef. That's the Kidworth case study in a nutshell. I won't go into the actual nitty-gritty of the financials. It's all included as an annexure, which you'll see through there. But what I wanted to do was probably just give you my take on the snapshot of the beef industry for the past 15 years and then probably answer the questions that the case study poses, or throw some ideas out there. We start from 2002 to 2005, there was that once in a century drought. We moved to 2011 and you have this property bubble that Ben talked about. 2010-11 summer saw widespread flooding throughout the state, which meant most businesses had to delay their sales programs. Couple that with the live export ban in 2011, and then you had all your northern producers who would normally go to live export, forcing their cattle down to the southern markets. Drought in 2012 to 2014, and even now, meant a massive oversupply of cattle, and obviously the cattle price reflected that. And then moving to 2015, the cattle supply has now decreased, the pricing's improved, but all it's meant is those producers who need to restock are going to have a serious problem. So the questions posed by the case study, and there are numerous, but the two main ones are: how do we recapitalise rural Australia, and where will the cattle come from to restock? Now, not to gloss over the second part of that in terms of the restocking, but I think if you fix the first one, you'll probably solve the second one at the same time. My personal opinion is recapitalising the business is more crucial, not just to the beef industry, but to the wider agricultural industry. The excess debt in many rural businesses is only a problem to the extent that it can't be serviced, and that it can be inappropriately structured for the client's business. Servicing the debt is about cash flow, and one of the key areas producers should be focusing on to improve cash flow is the revenue line. Now, Ben mentioned that by and large producers have always been willing to accept that they are price takers, and I agree with him that that doesn't necessarily have to be the case. Yes, you can go direct to the customer, such as our client going direct into China, but we can also look across the fence at our cotton and grain growers and see the hedging techniques they have in place. And although there isn't a listed market for that for the beef and lamb guys, there's nothing stopping producers from going direct to their clients domestically and having rolling quarterly contracts for the price set by the market, which gives security to both. Further, producers should also look at moving away from being strictly a commodity-based producer and look at developing niche products where possible into such things as organic or grass-fed products. Differentiating your product from the norm can be one of the easiest ways to disrupt and also increase the turnover of your business. We move away from the cash flow perspective and move into the capitalisation or recapitalisation of businesses and look at debt first, and it's clear that it's become the number one issue in rural Queensland business for the last 10 years. Unfortunately, there hasn't been a QR rural debt survey since 2011 when Bentleys last did it. However, I can attest to what Ben's comments are that rural debt wouldn't have really decreased too much given the current drought. And most of the debt problem came about by that debt-fueled bubble of 07-08 and the complete mismatch between historical cash returns and property prices. Now, I'm not too sure that if there'd be too many industries around the world where multi-million-dollar assets and businesses can change hands without the purchaser at least looking at the vendor's financials. But that's exactly what was happening up until at least 2008. Thankfully, the industry is moving away from this, and that's driven partly by the financiers' insistence on more thorough due diligence, but also on the sophistication of the buyers, particularly those from overseas, which is driving much of the present demand. That's great for the future because more sophisticated investment decisions will mean debt levels will reflect what the underlying cash flows will be, but it doesn't solve the current problem and the current debt loading. The other issue we need to look at is financiers who wish to be part and lend to agricultural industries need to be willing to accept that agriculture is a different prospect to lending to property developers in Brisbane, and the terms need to be reflective of this. Agriculture should have a minimum of a 10-year life cycle, and the debt should be reflective of that. Likewise, interest rates should also be reflective of the ebbs and flows of the weather events. A decreasing or interest-only period during drought, and obviously a reversal when seasons turn around. Still on the recapitalisation of the balance sheet and moving away from debt and looking at equity, and it's clear that recapitalising the bush, or part thereof, will come from this enormous foreign and domestic interest we are currently seeing. Bentleys International Advisory has advised in some of the more notable transactions recently, and what is clear is that these buyers are chasing scale and they're chasing businesses, particularly when they're co-investing, that are investor ready. Unfortunately, what that means is for most small businesses, such as the Kidworth, that lack somewhat of this scale, attracting co-investors is going to be hard, but it's not impossible. You need to be able to differentiate your business from your neighbour. As Sean spoke about before, having more thorough and sophisticated data reporting is just one of the things that we're seeing investors are looking for. The other issue I just wanted to touch on was getting these small businesses into some sort of investor-ready structure is next to impossible without incurring transaction costs in Queensland. And I'm talking about specifically transfer duty and capital gains. You'd be amazed at how many businesses, even the larger beef producers and sheep producers, who are still operating through mum and dad or brother and brother, brother and sister partnerships. It would be great, although unlikely, if the government were able to give concessions for these restructuring costs, because at the end of the day, the government would get their fair share on the back of a more profitable agricultural industry. So in summary, rising cattle prices has shown there is some light at the end of the tunnel, although there are still many that have to face the prospect of restocking, and there's still an uphill battle. At the very least, I hope this case study proves to be a valuable tool in developing ideas, and if nothing else, promoting discussion amongst us all. Thank you.
While the gentlemen are joining us, I'll start by introducing Mr. Tim McGavin, as he's the first up here. Tim is the co-founder and CEO of Laguna Bay. Laguna Bay was established in 2010 and now has close to $1 billion worth of agricultural assets that are owned, managed and or advised. It's led some of the largest and most successful agricultural transactions in Australia in recent years, and has investments in permanent crops, row cropping and livestock across Australia. He's also the founding shareholder and advisor to Boundary Bend Limited, which is now one of the world's top 10 olive oil producers. He is also a founding shareholder and director of leading Australian carbon offset producing and renewable energy generating company, and he is a registered participant of the Carbon Farming Initiative. And he sits on the advisory committee for both the United Nations Principles for Responsible Investing. And he was raised on a sheep and cattle farm in Western Queensland. Please welcome Mr. Tim McGavin. Also on our panel is Mr. James McLean. Is that you, James? I haven't met James before now. Pleased to meet you. James is a managing director of Allied Beef Group, which is one of Australia's premium cattle partnering companies. He has a background in feedlotting and cropping on the Darling Downs here in Queensland, and he has gone on to hold senior management roles in lot feeding, producing in excess of 100,000 cattle a year for slaughter. And basically what he doesn't know about beef and supply chains isn't worth knowing. So please welcome James McLean. Now, we all met Mr. Ben Cameron, the managing partner of Bentleys, so please welcome Ben back to the stage. And our final panellist is Mr. Brian Heatley. Welcome to the stage. Come on down, Don Chandler. Don is not a lawyer, as far as I'm aware, for holding Red Leach. Well, as Ben, as you've been up on stage already, and we remember there was one point about bonds that you did want to talk to us about, but before we get onto that, I'm going to start the first question with you. And if we could have those mics, thank you. With your experience, particularly we've heard about the Acton ACCC deal that you assisted with. Do you believe that something like that can be rolled out to smaller operations?
Yeah, I do. We all talk about scale, and yes, it's great, but there are 90% of producers don't have that scale. So I think what needs to happen is there needs to be these sort of micro co-ops forming. Now, co-ops went out 20 or 30 years ago, but I think they need to come back in. But it won't be government driven, it has to be industry driven, it has to be niche driven, probably starting informally to maybe formalising. But there's a whole different culture change for the bush because, as I said, traditionally the bush don't work well together. I know they're good friends, but they just don't seem to want to work together. I don't know why that is.
We have seen co-ops form in the past and be successful for a long period, go on to become companies like Wesfarmers, or that do well for a period of time and then seem to disband. Is there something that you feel that co-ops need to adopt, a particular structure that may assist in their success and their longevity?
Yeah, I think right from the beginning it needs to be effectively corporatised. There needs to be governance, there needs to be accountability, there needs to be reporting, and then you need the support further down the supply chain too to make sure that whatever you're doing at one end, that there's no impediments right to where you're going to end up with your product overseas or in a supermarket. You need to get rid of those blockages of which there are now, and that won't. A group of 5 or 10 producers unfortunately won't solve that issue. There needs to be government assistance. When I say government assistance, they need to do their best to get rid of the blockages and invite private enterprise into fixing the problem.
Can I just ask for the second microphone as well for the panel? And just while we've taken this momentary break, just to remind you that you're all welcome to join in to this discussion. Just raise your hand and we'll take a microphone to you. We heard briefly then about supply chain. James, share with us some of your insights about where you think the opportunities are for supply chains.
Thank you, Nicole. I'm probably supportive of Ben's. I didn't hear Ben's presentation earlier on. I'm a strong believer of not necessarily a co-op, but a consolidator type model where a party makes a decision and works closely with its cooperators, I suppose. Because as Ben said, traditionally co-ops, whilst they were very successful in a previous generation, more recently they haven't been. And it comes down to the lack of collective or commercial driven structures that a lot of them have traditionally been modelled over. Whereas in a more of a consolidator or I suppose a single entity making a decision on behalf of a group, how the horticultural sector, for instance, generally works, whether it's in Australia or overseas, that allows one person or party to offer different products to a variety or to a group of partners that it's working with that meets their objective. And then collectively, they're a very important component of the supply chain, which means they have the ability to add value further up the supply chain back into the international or domestic markets.
Are there any comments on co-ops from the audience? I know Professor John Cole has some thoughts about small co-ops. Yeah.
If you look at Norco and the experience of what's happened in the dairy industry, I think James's point about the history of co-ops is right. They became a little bit lazy in their generations beyond the farm gate. I'm not talking about going back to the past. We have to probably take what lessons we can take from the past, including where things failed, where they didn't actually work, and understand why that happened. So I'm interested in Ben's idea of the micro co-op, because I think it's probably at that scale that we're talking about. At the level of what might otherwise be called a joint venture.
1, 2.
Yes. If you could, we're just having trouble tracking down a second, Mike. If you could just stand and.
Regarding co-ops, as far as I'm aware, something like half the bacon Australia eats comes from the pork from one cooperative. So some people can do it right. The only problem for us is that cooperatives in Denmark. So even if you're in Denmark, you can supply pork into Australia competitively. So you can get it right in the co-op.
Any other comments from the panel on co-ops or other setup, other ways to ideas of setting up farming ventures?
Is this to attract capital or is this for marketing of offtake?
It's an interesting point.
My view on is that the reason it would be done, particularly in the area of particularly the area we're talking about, Western Queensland, is firstly is the recapitalisation of balance sheets, and if we have a situation out there, which I believe we do, where on the aggregate everyone has absolute debt saturation on top of no herd, and this is rebuilding phase, there's only one thing that can happen, and that is a balance sheet workout, so the debt has to be capitalised. Some of it should be written off, and the banks probably deserve a haircut for some reckless lending. Capitalism probably does as well, but that's a whole different story. So I think the co-op, or to get scale to refinance with equity, is probably bringing together your 25,000 acre or 10 of those together, so that it actually has the scale to attract the capital, and there's a cost that comes with having external capital, and there's a big cost, like a governance, compliance, regulatory cost, unless it's just high net worth backing, going and shaking the hand of a farmer and backing them individually. I think that's the only way out if we're not going to amalgamate some of these assets. And I think step one is getting that, and then they've got a bigger pool of or a bigger herd in order to also have the scale going to try and market in what would be a co-op or whatever. So I think they're combined or related.
Yes.
Julie Cotter from the University of Queensland, and some of the research we're doing is showing that all of these things there seems to be some disruption in the supply chain at the moment, which is, according to Ben's comments this morning, is probably a good thing. There's different opportunities coming up to be selling branded premium products rather than just commodities, and I think that's a real opportunity for Australia. But at the same time, we want to make sure that some of that profit goes back to the farm gate, and cooperatives are often a good way to do that. We're just finishing up a case study on Norco, and we'll be publishing some lessons we've learned from them, and governance is definitely one of them, but there's a few other secret ingredients that have made them, they're just celebrating 120 years now, successful. And there's some new, just had a national cooperatives legislation helping co-ops free up their access to capital, so they can now issue cooperative credit units, which are like a venture issue to the market. We've also seen some recent examples of equity issues by cooperatives, kind of B-level shares that are non-voting, so that family farm businesses in the co-op are still able to vote and have governance and democracy as a co-op.
You raised an issue there about being in a good state, really, financially, to be able to form a cooperative, and a lot of producers at the moment, because of the drought, are not in a brilliant state. Any comments from the panel about what producers can do now to start trying to either make themselves attractive for joint ventures or to commence discussions about co-ops?
as I pass it along, I'm not sure if I'm smarter than you, Tim. But I mean, I have a strong belief in not being an accountant and privy to a lot of things Ben and obviously bankers are. But I actually don't think it's a debt problem. I actually think it's a cash flow problem. And on the back of that, to me, it's about coming up with structures that actually deliver cash flow back to the producers, regardless of what the debt level is. I mean, you need to have a profitable business, but a profitable business with no cash flow still is unsuccessful and ends up folding. So to me, it's entering into contracts with partners who deliver a continuity of cash flow to your business that meets your expectations is actually a whole lot better than taking on a partner who wants to influence your business decisions or put more debt. Yeah, I think on the small scale, in terms of this recapitalisation, we know there won't be a cookie cutter approach. If you're in the cattle industry, you want to stay in the cattle industry, you're going to have to find someone with cattle, and you're going to have to convince them to expand, not by buying the property, but by working with you, whereby they put a mob of cows there. Those cows, and you need cash to pay your bills and your rates, so you get an element of cash, which is not market, but then at the end of the day, you get to keep the heifer calves, and everything else, progeny goes back to the cattle owner, who may be an unfortunate situation for you, and then you have it all written in an agreement in 5 or 6 or 7 years' time. You call it quits, or you might just happen to like each other and continue to work together. But during that whole process, the biggest and the most important thing will be you will have to have your banker in the room with you doing these negotiations, because he is a stakeholder in your business, whether you like it or not, and ultimately he or she needs to agree to the plan you're putting together, and his agreement will be, I'll stand back and watch and implement a standstill agreement and let you two guys work out slowly. And I think that's probably what we'll see a lot of. And once that starts to work and you gain momentum, and hopefully we'll have a run of good weather or normal seasons, if there is such thing these days, and we can crawl slowly out of the hole, but it won't be quick.
Just before you start, I'll just check in with the audience to make sure that there's no one out there with a burning comment.
It's a bit hard to hear some of the panel.
The microphone's not really well.
There are some.
Are we better off not having the mic?
Yeah, probably. And there's some seats. There's some more seats at the front here. So if you are having a real problem hearing, just shuffle forward for us now, and we'll all do our best to project better.
Thanks, Carl. Look, I don't have a lot more to add to this specifically. The only message that I would say is it's really important. A lot of the people that we're probably talking about in terms of these producers aren't necessarily, some of them won't feel comfortable communicating or having those discussions or initiating that. So, my biggest message is to encourage that conversation with the likes of Ben and his firm. Go and have those discussions with lawyers, rural lawyers. The bush is so well served by these professionals, and that's where the conversation should start. And likewise with the banks, you've got to have good communication and good discussions, because that will lead to, these meetings, alliances, opportunities that will present. And some of these producers will have uniqueness about their business that, that may be able to be tapped into that they haven't seen yet.
I think that's working now. I can hear it. My biggest tip for the day is if you can make a mad dash down to Queen Street to grab something from the office and get back to Parliament House in 25 minutes, you've got no chance. So I'm sorry I was late. I always preface what I say by saying I am a lawyer, so another lawyer in the room says that's okay. That's terrific. So sometimes I'm not involved operationally like the smarter minds up here, but I do have a lot of this stuff come across my desk, and we do put a lot of it together for producers and also for investors. So I certainly do see common themes in what we're talking about. And some people in the room might say, well, naturally you'll say this, but I mean it genuinely. There is definitely a role for advisors in the process. And it's not that we possess all the answers, but we see it, and there is definitely an educative process to be undertaken. So what I say is that there is a perfect storm. Australia has truly the best primary producers on the face of the universe, but they are constrained by high levels of debt or lack of access to capital. The flip side is we have a world which is absolutely ravenously looking at Australia's agricultural sector for all of the reasons people have talked about today. And I certainly act for a lot of international investors, and in particular large numbers of Chinese. And on their side of the fence, they want to invest, let's say, in the beef sector, which is really hot, and they think that they can buy cattle properties and run them pretty easily. And we know that that's not the case. But what they do have is plenty of capital and a desire to get into the sector. So you've got this perfect marriage waiting to happen, but it's just not connecting. And it is truly an educative process. It's about educating investors that you've got these best producers here waiting to do a transaction with you, and then you've got people with plenty of capital that can assist. So we've got to join them up. And it is educative. 5 years ago, we were saying that institutions won't invest in agriculture and they won't list, or if they did list, it wasn't spectacular. That may be about to change. So it's gathering momentum, but it's the whole agricultural community has a role to play in getting the word out and educating people on how to do it.
So I guess the big question then is, how do family operations tap into that foreign investment? We heard earlier from Ben talking about it wasn't as simple as even finding the market to send your beef through if you couldn't get an abattoir to follow your supply chain through. How on earth can we reorganise or restructure smaller, we're not talking about big companies here, family companies or micro co-ops, if we can get them together, to be able to tap into that foreign market? Is it there already?
Yeah, look, I'm not going to add anything new to what's been said, but it is definitely, in many instances, a question of scale. So it is in districts getting together and organising. But a number of people have said today about getting investor ready or, in fact, doing vendor due diligence. So, and I don't mean this in a dismissive way, but if you're looking to raise capital, you have to spend, in my experience, a significant pot of cash and a significant time period to get the business corporatised, to get it ready, and to make it attractive in order to seek capital. So that capital is not going to knock down the door, and I know no one's thinking that, but you really need to take a period of time to get ready, and it will take significant time. Before we come to Tim, there's a lady over with a comment. Yeah. Yes. Could you stand up, please?
So after 187 years in this industry, in the cattle industry, I think there's one thing that we can be clear on, which is that it is a cyclical industry. And whether it be prices or seasons or exchange rates or the US herd, what we do know is that we will be more attractive or less as time goes on. So we have had foreign investment in the past, whether it be initially the English, followed by the Americans, followed by the Japanese, and now the latest investment round of the Chinese. So I appreciate that there are some food security issues and growing populations, wealth in other populations. But what I would like to see come out of today is a discussion not so much about how we attract other countries to buy us out, certainly partner, but how we see the sustainability of the Australian producer, which is the expertise and the longevity that we really want to see. I think, though, what we need to talk about is that we often have conversations that we come together and we discuss what are the big issues. And it's very satisfying because we're all wildly in agreement. But the reality is that this goes nowhere because we are a highly fragmented group. Now, Brent Finlay was here earlier today. I'm not sure if any of our other industry groups are. But what we have to get serious about is becoming a professional lobby organisation that operates in the same way that the mining industry does. So the big productivity changes, the big things that will make a difference for Australia is when we stop having a 3% return, generational return in beef. Those sort of issues are electricity investment, technology investment. We can't check Westpac at Cloncurry without the internet going down. We can't turn on the oven without the power going off. We can't invest in a new abattoir at Hughenden without adequate water. And the only people who can provide approvals for those things are government. And having had the privilege of working government for a couple of years, I can tell you that the agricultural industry, whilst it is an interesting tour destination to Longreach, which is in the grip of this terrible drought, that's about where it stops and starts. So until we have a much more professional, single voice, unified voice, then what will happen is that we will continue to have interesting, fruitful discussions that won't go to the ears of the people who make the decisions that these things can happen. So I'm interested in generational sustainability, not just a corporate investment, which is by its nature going to be shorter term than what we want, which is to see Australian producers last 4 generations to come.
Thank you, Susan. Do we have any of our members of Parliament or opposition in the room anymore? There were some earlier today.
I'm here.
Yes.
Yeah. Hi, this is a great time for me to jump up and introduce myself. So I'm actually Deb Frecklington, the Shadow Minister for Agriculture in the State Parliament here in Queensland. And Susie McDonald, I couldn't agree with you anymore. It's a fantastic contribution to today. I think what I was just going to say is we have obviously the major issues of debt in Queensland, as we do on a federal level. But Susie's completely right, and if I can implore this room to get together and work as a group and the entire agricultural sector, because I think we've got a fantastic opportunity right at the moment. For the first time in generations, agriculture really is at the forefront of everyone's mind. It's in the forefront of investors' minds, and it's also at the forefront of now, thankfully, our educational institutions, because they do see agriculture as the future. And obviously, even within government, we need to move the conversation, in my mind, away from debt. Away from drought. Sorry, that is exactly what I meant to say, drought, not debt. Because I agree with what James said. Debt is a major issue, but for the everyday farmers that I'm meeting as I'm getting out and about, it's the cash flow that they don't have. So today what I'm really interested to hear in from all these people and yourselves that are way smarter than me is what it is that you think governments really should be doing, particularly in relation to the debt issues that we have out there. But this is really, we need quite an immediate solutions, which is going to be extremely difficult. There was someone up here that said the banks might need a bit of shaving for some of the lending practices that could be right. Sorry, Troy, I'm not going to pick on you, but that could not be right. But it's where government sits in that, because governments can't be the fix-all for everything as well. But we do have certain levers that we can pull, and that's where we need the industry to, in a roundabout way, to all work together to talk to the politicians in the room rather than coming at us as a fragmented industries. So that's just what I want to say.
I'll start with you, Tim. Any responses to that, bearing in mind that we want to talk about plugging into capital at the farm gate?
Yeah, okay, both of those. Firstly, thanks, Deb and Susan. I couldn't agree more. So firstly, Susan and the generational, we obviously have a generational change. We have an average farmer approaching 60, and so this is a perfect opportunity to start thinking about these things. So I think in Canada there was capital gains tax and stamp duty transaction relief on any farming transactions that were intergenerational, and I think you could extend that to amalgamating or getting scale or whatever, so I think that makes perfect sense. We don't want a massive retirement from the bush and for all the 60-year-olds to head to the coast. It'd be much better for us if they stayed out there. So, thinking about title and how to maintain access to your home, the acre around that, because I'll tell you, as an asset manager, we don't want 20 houses on a $20 million property. We probably only want 3. So we're more than happy for mum and dad retiring to stay there, and as long as we don't inherit something that's run down, so, charge a nominal rent and this all goes back into the house, or be able to segregate that and they can rent it back or something like that so they stay in the bush. I think in terms of regulation and where the government should sit, I know what they shouldn't do. They shouldn't regulate the hell out of all our inputs and have a laissez-faire attitude towards finance, banking, prudent lending, but also supermarket monopolies. And I'm not just here whinging about that. It's more about our farming leaders have completely let us down, in my opinion, in terms of just being dumbasses on uniformity, on getting together, and exactly like the mining sector has in terms of having the smartest and best and brightest people up there that aren't just turning up every week whinging about something. They're with very proactive ideas, and starting with looking at the new health regulations in food, and I'm very close to the olive oil industry. So what we've done is we've allowed the supermarkets to bully the policymakers into these health standards, and so we have the single most healthiest food in the world, and that's a fact, is olive oil at the moment. It's got more natural ingredients, more antioxidants than any other natural food. It's 100% natural. It's got the same health rating as margarine, and the reason is the lobbies of the supermarkets want all this low-cost crap to feed down the consumers because the margins are absolutely huge, and that's just raping our local producers. So that's just one little example. And on the unregulated, and Ben's point in terms of just absolute bottlenecks in a lot of the logistics side from abattoirs to ports to whatever else. So thinking about that and promoting in whatever capacity ways to fix that. Now, I haven't put a lot of thinking in that, but someone has to, and it goes back. That will solve the revenue side of things. So James or someone in the last CEO summit spoke about financial literacy. It starts with our effing policymakers and the banks, right? Predator lending, you can't go and lend someone 100% debt financing on something that's 50 times earnings. That is dumb, right? People were doing that, and that's fine. Capitalism will always take up the leverage as much as it can. It's APRA's responsibility to set parameters around that. So the banks deserve a haircut, and probably some of the producers do as well, to recapitalise, or not to recapitalise, but to get those debt levels back to a sustainable sort of long-term average. And you've got to make these people start eating their own cooking, and we've gone and government guaranteed all the banks' balance sheets during the GFC to prop them up. So, we can't be so biased as to what we regulate and then what we laissez-faire, because the farmer, and I believe it's leadership, always cops the short end of the stick.
So some of the solution, we're talking there about better leadership. We're looking at different techniques like capital gains relief that you mentioned about in Canada. So there are a couple of actionable things that you feel would start to address a capital.
They're just a couple of little examples where we can start hammering solutions.
Yep. Boyd Curran down the back. If any of these ideas are starting things off in your mind, this is where we want to hear them.
So just on Tim's comment there, the reason why we've got such a diverse range of people in the room here today is that we can actually affect change. We can actually action some of the ideas, create the products, and create the opportunities for the drought-affected farmers, because it is a huge issue, and we have to really, I think, grapple with that at the moment. The reason why we've got the likes of Deb and Robbie Catter showed up before, and there's been I think there's been 8 to 10 sort of politicians coming, is because they're enablers. They can enable these ideas. They can't come up with them themselves. So we've got to white label the opportunities for them and for ourselves. So it's all about the individual standing up and commanding what is the solution, and banks are part of that. So we are where we are, but we've got to actually generate new opportunities, and banks are enablers just like government. So I think, yep.
I've spent probably $6 or $7 million building a fund in the last few years to raise money for agriculture. Deb Frecklington's the only person, only politician, the only leader who's picked up the phone and asked me what we're doing right, what we're doing wrong. You guys, has any policy maker or government minister rung you up as an industry leader, as a participant, and said, what's the solution here? Yeah. Sorry, but that's the problem.
Yeah, that's brilliant, and Tim, that's why we're creating these platforms to actually explode the profile of the issues, and then it draw people in. So that's why it's here, and that's why we're trying to affect a bit of change and engage. So I'd encourage the collective here today. We can really affect something.
And just to finish off on the capital, I think firstly, I'm very happy to participate in this, understanding what the capital wants, understanding what type of capital might be attracted to what type of opportunity, and understanding what its requirements are. So Western Queensland, for instance, or that area, if you've got a $20 million aggregation, then you go and see Brian and Ben, and you actually are going to spend somewhere between $100,000 and $500,000 if you want to go and raise $20 to $100 million. That's just, pluck those figures, but that's what it's going to cost, and that's not a rule. That is, to get investment ready, you need that. If you're going to go and raise money from a high net worth, my guess is it's still going to cost you, I don't know, probably $100,000 to get. Most farms are non-reporting entities, and most people only do tax accounting and don't do management accounting, so that's a problem. And getting an incentive, and I don't care if it's a stick or a carrot, but an incentive for the financial literacy. But that starts with the funding should go to the benchmarking groups that actually sit there and collate all the data and work out who's good and who's not. It's not a matter about picking on the guy who's bad, it's a matter about everyone raising the bar. And that's where we can get this generational change, because mum and dad will sit down around the table and they'll look around and they'll say, we are actually not real good in these areas, and they can raise the whole bar and it goes to the revenue line. So being realistic about the cost and the process and what sort of capital, because I can tell you right now, I was totally unrealistic about thinking, we can probably launch a fund and it'll take a year, it costs $1 million or something like that. Well, everything's about 10 times more expensive, it takes 10 times as long. And that capital doesn't have to invest in here, we are competing against. So at a big level, we're competing in the real asset markets. We're competing against infrastructure, real estate, probably mining, renewable energy, and agriculture sits in the one bucket now, generally speaking. Sometimes, there's alternatives, or there's, even fixed income markets are now starting to look at agriculture as a structured debt sort of product. But we need to know what we're competing against, know what all those other assets look like from an investor, and they just rock up and someone doesn't even know what they earned last year. They're not going to give you money. So getting that investment grade, investment ready or whatever, and it's sort of not rocket science, but you do need a hand with it, and I find myself bridging the gap between farming and finance all the time, and they're completely different languages.
Now, we are here to hear from you in the audience. I'm sorry, Boyd, we've handed the mic over to someone. Yep.
Hi, Troy Constance here from Suncorp Bank, Tim. Look, I guess my observation of the conversation today is there's been absolutely there's some challenges in the industry. Also, there's a lot of optimism as well, and it's very much wrapped around capital, but I also heard a lot about viability, particularly for the long term, and sustainability. So I guess whether it's debt capital, whether it's equity, and it's obviously cyclical, there's a lot of ups and downs. There will be another drought in 20 years' time, 15 years' time. The commodity price will go up and down. That's the nature of ag commodities. So how do we collectively, as an industry, professionalise family farms? Because particularly at Suncorp Bank, our main client base are family farms, and we definitely see that there is a gap. So whether it's foreign capital or whether it's debt or whatever it is, our view is that the whole industry, that's banks, that's accountants, that's capital providers, and also people who are looking at other type of structures as well, such as you, James. So how do we do that as a whole?
Benny.
Well, I think you've got to corporatise the family farm. That doesn't mean you have to change the way they do it, because families can do it better than the big corporates. But what it is, corporatising means setting some rules of engagement around the family. And one of the things we're trying to do when we get the opportunity to market assets in the industry, we're trying to break new rules by offering up into data rooms and financial information of the vendor. Now, if I tried to do this 7 years ago, I would have been shot down. Well, I wouldn't have got a job. But that's what the sophistication of the buyer is asking for. If they buy any other business outside of agriculture, you've got to supply 10 years worth of financials. So, you know, it's everyone needs to play their part in trying to professionalise the industry and bringing it up on par with the other industries and what they do when they do transactions. You know, it's around governance, it's around reporting, and it includes, you know, proper reporting to your bank and to satisfy your covenants. You know, 7 or 8 years ago, I'd say 80% of my clients didn't know what a covenant was. By Christ, they know it now. But, you know, the other thing that we need to be careful, while we've got the politicians' ears, Deb, you're listening, one of the things we talk about is this investor ready, and if you're going to put corporate governance in place and all that, you need to tidy up your structures. Now, yes, there's been a stamp duty exemption for handing the family farm down. Yes, it's been there for 100 years. It was revamped the other day to not only go down, but be able to go across the family tree. But what the biggest problem is the only way you can get that exemption is if your asset is unencumbered, i.e. you have no debt or it's not pledged as security. Now, how many of us that work in the industry have an asset that is unencumbered? Now, I think I've used it once or twice in about 10 years, but we've done about a restructure every month for the last 10 years, right? So that needs to go. I mean, if you want to try and you know, you'll get it back in, the government will get it back in spades by having this cleaner, tidier, being able to hand the reins down without incurring a 5.5% bill on your value of your property. Needs to go. Capital gains tax, that's a federal issue. It needs to be re-looked at. You know, for succession and internal purposes, it is blocking transactions. It's blocking the ability to transact into these investor-ready structures to be able to accept capital. And I'm sure they can do carve-outs for family, you know, those sorts of things. The other thing which sorry to hog it, guys, but that's my political lobby.
Ben, are you about to change tack?
Yeah.
Before you do, we'll come back because I want to hear about your bonds that you mentioned earlier. But first, Boyd Curran in the audience has been waiting very patiently for his turn to speak.
Righto. Thanks, Nicole. I see in the handouts that I come from an organisation called the De-Stock Beef Producer, which is a new organisation. So it's been very innovative here today. But a couple of things that I want to talk about, because I'll get this one opportunity. The big question is, why don't we have more government people here? So it's not about the fact that we don't have the people who influence, the people who can enable things, who can cut the regulation. The question we've got to ask ourselves is, why don't we have the influence so that they are all here in the room? And Susie talked about it earlier on. We've got fragmented industry voices. You know, what James is doing today is fantastic. And I live at Longreach. We're in the middle of an unprecedented drought that's been going for 3 years. And we've got all these great organisations with WQ Drought Appeals, and we've got this on today, and someone else is doing something else. I've got to say, AgForce, I haven't seen them, so I don't know what they're doing for us. But we need a united voice, and we need to have influence. We need to be much more strategic in the way, as an industry, we come together. Because the reality is that we're in the middle of a drought where at the moment I think we're just under 2 inches for the year, and I think we've had 11 inches in the last 32 months. You know, it is unprecedented what is going on. And the government support that we're getting is really minimal to have an effect on what is occurring in our community, because it's not just the people on the land, it's the people in town. You know, it's the businesses that are down 70 to 80%. So this is an unmitigated and unprecedented disaster, what is happening for us in our region. So I think that as an industry, we need to look at how we become more influential. Leadership is just not about inspiring and coming up with a vision, but it's your ability to influence people, and that's what we don't do well enough. So a couple of the other things, you know, I had a look at this. The objectives of this summit is to get capital into distressed farms.
what we've got to do is present a sustainable, profitable business model. And how do we do that? We need intermediaries, we need brokers who are, you know, whether it's our accountants or trusted people who are going to pull together the business model of what we can do in the future and then help broker capital coming in. And remember too that equity costs you more than debt. You know, there's plenty of opportunities. Co-ops, I love the idea of co-ops. They're really great in principle. But again, you know, the whole governance required that sits around it is very complicated. People's emotions, you know, in being part of a co-op and having to let go of some of the ownership of their investments. So it's not so easy, but I believe that if something to come out to this, to work at some sort of a brokerage or an intermediary to help people who are distressed at the moment and how they actually come together and look at options for actually injecting capital into their businesses. So that's maybe something that we can action out of today. A framework for those wanting to expand. You know, I think again it's coming up with a sustainable, profitable business model. And for those who are keen to make a start in farming or grazing, I'd suggest that they have a very good day job where they make plenty of money, then they invest in the industry and they keep their day job. Because there's a great saying in Texas, it's amazing how cattle thrive in the shade of an oil well. So if we've all been told for years that we've got to diversify, but when you're on a family farm and you've gone straight home from school, you've got no qualifications, no trade, it's not easy. How do you diversify? So the idea of co-ops appeals to me because you're using your asset that you've got there, you come together with like-minded people and you utilise your assets to diversify into other businesses. But again, this is where our, whether it's our accountants or our trusted business advisors, we should be talking to them on a regular basis about these types of issues, about how we can expand our businesses. I think that, you know, as far as with politicians, I keep thinking about how we're regulated, and taking on your point, Tim, about regulation. You know, Kerry Packer years ago talked about politicians bringing legislation. He said, I've got a great idea. Every time you bring in a new regulation or a bit of legislation, get rid of an old one that doesn't work. Because he said, you know, we've got all this regulation and new legislation coming in and the world's not getting any better. So I think the role of politicians is to enable us in our business and in our industry. That's what it's about. And Deb, I'm really pleased that you're here today, and Lockie Miller's here. Is there any other politicians here? No. So, and that, with all due respect, it says about our influence. It's got a lot to say about the influence we have as an industry. But I congratulate James on putting this on, and I thank everyone for turning up.
Thank you for your input, Boyd. I'll just make sure there's not anyone else that hasn't had a turn. Susie, yes, over here. Get started and he'll catch up.
Quite as bad at the moment. We run a cattle operation and probably debt, we've got plenty of debt and getting more capital in is not the issue. We see opportunities every day that are going by, and we see our costs skyrocketing because we don't have good infrastructure. I don't need a handout, I don't need more government subsidies, I just want a good road and I want the bloody internet. The internet, for example, and telecommunications is costing my business thousands and thousands of dollars every week. It's just because we can't get quotes on time, we're missing the market, a whole variety of things. We can't even use zero accounting because it's cloud-based, I have to drive to town. So all of those things are missing from the bush, and the divide between what's happening in the city and what's happening in the bush is getting further and further. So why would you want to invest in a business that can't operate in this century?
Thank you for your comment. And I think I've heard that now you can only get NLIS forms online too. So back to the panel, unless there's another... sorry, Susie, if we could keep it short.
Only a handful who are west of the Great Dividing Range. It is no point asking them to continually take up our battle if we have failed to connect with the domestic consumer, who is the domestic voter. So the other 87 Queensland parliamentarians who aren't here today will not do anything when Deb knocks on their door or Lockie knocks on their door, because their electorate isn't alive to these issues. So again, Boyd is right that it is not a matter of us doing more, thinking more. Kara's talked about infrastructure. The only way we can do it is as a unified industry group who can knock on every 89 door and not rely on two people who've actually been out there and seen what happens. But until we do that, we are just wasting our time. And I don't see the mining industry throwing open its doors to have think tanks and have the whole world look at your dirty laundry, when there is an opportunity to get together, nut out what are the most important priorities and take those up.
Susie just touched then on, I guess, in a nutshell, communicating what we're doing, and that, I guess, leads into branding. How important or are there opportunities still or lessons still to be learned as far as branding or setting a point of difference for foreign investment or other ways of getting capital? Do you think people are on top of this enough now, or is more work need to be done?
For me, branding's a communication of a vision and a trust and an association with a product or a service. We're obviously all very familiar with retail brands, and that's good from a consumerism point of view. But to me, in the beef industry, branding is about what value from a supply proposition do you offer to your chosen customer, and what value attributes do the group of livestock that you represent add to the customer. Sadly that's not. It's done a little bit in the US. A few seed stock businesses in Australia are doing it, but no one has the critical mass. We've got the top 20 beef processors in the country process 85% of all the beef. The top 20 beef producers in all the country produce 8% of the beef. So there's just such a massive divide, and from a relationship and a communication between the supply chain, the aggregation of the top 20 beef producers in Australia, including AA, Kidman's, Hughes's, etc., still is not actually that relevant from a JBS point of view, and to me that is a very, concerning issue moving forward, and that's a major issue in regard to the producer's ability to add value to their chosen customer. If a customer or a group of suppliers only represents 3% of someone's annual supply, there's a fair chance they're not going to get a large hearing, because if they miss that 3%, their JBS's business is still going to go on and be very successful. If a group of producers under a brand, under a supply chain agreement, produces 80% of the requirements of a Cargill or an AA or a Nippon or any beef processing company, they're the first person that supply chain processor, marketer will be sitting down with every year and negotiating a price. Those guys will sit down and negotiate a price. What band would you like? Would you like a band for 6 months, 12 months, 2 years, 3 years? Because you are so valuable, you've made yourself that important to that customer, and I think whether it comes back to the co-op, but it's the individual producers on their own are sadly, very irrelevant to the large consolidated customer who we need to work with, and that's the opportunity. And on the back of being important, becomes a price guarantee or a guaranteed payment guarantee. There's so many things. If you deliver something to a customer, it's amazing what they'll give back to you in the way you actually want it. But if you're not relevant to them, as we all are now, in most cases, that's a bit of a general comment, but in most cases we're not relevant enough to go to somebody and say, well, we want this for the next 12 months, we want that for the next 12 months. And to me, it's an exciting opportunity, and it does come back to branding. It's what that value is.
If we could go to the end of the panel, how important is branding or point of difference for product in your foreign when you deal with overseas companies looking to invest? Are you finding that particular countries are looking for a green stamp as well as a great supply?
It's definitely important. So if I'm sorry to default back to sort of the the potential wave or semi-wave of Chinese investment into Australian agriculture. Maybe not everyone buys into that story, but Wagyu was flavour of the month. That's not intended as a pun. A year or two ago, they've dropped that. But brand is very important to them. It's also very important. Richard Norton would be a better commentator about this than me, but particularly Northeast Asia, brand is very important, and that's how he comes up with a graph that says, Japan is an absolute goldmine for Australian beef. So branding is very important to foreign investors. So.
Ben, are you happy to come back to you? We're yet to hear about comment from the audience here. Get the mic.
Thanks, James, for inviting Ben Lyons from TSBE or Toowoomba and Strat-based Enterprise. Great to see some colleagues and friends that we've been doing some work with. Just on the branding one, and going back to Boyd's comment about and I suppose what this is about is getting some good minds in the room about collaboration. It was interesting, I caught up with Paul Swan, I used to work with at AWI 10 years ago, and my first question was, I've seen this True Aussie Beef thing from MLA being launched in China and North Asia, and it's a good thing. I bet you they didn't ring you, because for 20 years in the wool industry, we worked about how to brand Australian wool, because we were the dominant player, and we're fast becoming the dominant player in Asia, and particularly in China. And that's sort of a joke between us, but that's the sort of hurdle and obstacles that we need to get over, I think. The beef guys didn't want to talk to the wool guys, and the wool guys had been through it, and through a lot of dollars, millions and millions. I think we got McKinsey twice in 1 year, in the early days, Brent. And that branding piece is very important. If Brian's Klein and Jongfu at the moment was with us in Toowoomba the other day, and we were going through Oki looking at, the different brands, the Prime Reserve Wagyu, the Angus Reserve. He didn't care, which is a pity. They will care, but at the moment it is just Australia and it's brand Australia. So we have to be I would just hesitate and say we need to be very astute. I would suggest to an MLA at the moment, be very careful about the protection and integrity of that brand, because they're not talking about New Zealand in some ways, just because of association with Fonterra and the melamine milk thing. So I think a lot of that integrity of what we do here and those great systems that we've been forced on us by Coles and Woolies will stand us in good stead. But I would suggest that these industry groups and these forums, the lawyers, everyone needs to be aware of it. There is a great fragmentation, and every farmer likes to think they own a brand. I think that's a fallacy. I think that's folly. I don't think there's any value going through. I think there just needs to be a reality. I think cooperatives are a good way. We're doing some work in our region in that regard because of critical mass, and I agree with that. I just suppose I had to get up, and I was excited because a grower just sent through an email and said, I've just got 15 tonnes booked on a flight from Toowoomba to Hong Kong on the 23rd of November. So I'm interested to see how that brand and how it goes through into China and watching that space. But I think that these conversations need to keep happening. I don't really mind if there's no government people in the room. I do love having Deb here. But I think yes, enablers is what they do. They need to be aware, but we need to get our shit together.
Okay, that's a good point to end on. And we'll just come up, if we can have the mic back, to you, Ben. I still want to hear about your bonds.
Yeah, okay. No. Well, it probably extends on from your branding. I mean, everyone that's a producer or in the cattle industry or the wool industry or whatever should be able to have the ability to pay someone, if they're not invested in that part of the supply chain, to pay someone to do a job so that they can then take that product and they can form the relationships with the guy in China, with the guy in Hong Kong. If it's not branded, it's about the relationship. I'll supply you product, you pay me, and if you do, I'll do it again. And that's how you build relationships, and that in itself, I think, is a brand. But you need to have a supply chain where everyone can get what they want at each stage, and at the moment you can't. Well, you probably will soon, because there'll be the supply of cattle will be so low they will open their doors. But the role of government or the role of industry is to make sure there's no blockages and to make sure everyone can participate. So governments, no one wants handouts from governments, but what they need to do is to work a bit smarter in how to fund these infrastructure blockages. We don't want the government to build it and buy it because they'll screw it up. What you need is one of the sources of capital which no one's spoken about today is domestically. Now we have a superannuation industry, Don, how many trillion? Trillion, and growing at 9.5% of everyone's wage every year. At the moment, they've all allocated to cash, and the Reserve Bank's cash rate is 2%. So your super money is growing at a whopping 2% per year. Why can't the government set up a professional bond issuer whereby the Australian super funds, because the members are the Australians, can invest in a bond, an infrastructure bond, and get 5%, and then that infrastructure fund actually has a wish list put forward by industry, put forward by regional towns if they need a hospital, or Hughenden if they need that dam built, and then there's actually some people that know what they're doing on that board and allocate the funds. Now, all the government has to do is to guarantee that 5%, and it's a 20-year bond. Then the superannuation trustee is happy because he was only getting 2, and he's going to get 5, government-backed. The member's happy because they're getting 5%, their super is growing a lot faster than what it was. And then in 15 or 20 years' time, they'll be proud Australians because their savings has built an asset that's tangible, that you can touch, that has actually benefited a community. So why can't we tap into those domestic superannuation funds? You know, the Future Fund in Australia was set up exactly for to superannuation entitlements for the public servants. I don't know, I think it's 80% is invested offshore. Now that's what the asset allocators, right? And I get that, right? We don't want to interfere with people's superannuation monies, but when you're getting 2% and it's government backed and you can get 5, I can't see a problem with it as long as it's regulated. There's all the checks and balances and the governance around it. And we're not asking the government to pay it, we're just asking the government to facilitate that to occur.
Great suggestion, Ben, thank you.
And the other thing too, is that for those that are fortunate to have made some money in the last couple of years, and there's a few east of the divide, they're going to put it into farm management deposits to save some tax, and then they'll pull it out when they're having a drought. Why can't those FMDs be funnelled into the same infrastructure and actually get 5% instead of 2%? There's plenty of things we can look at to try and to access this capital, and all parties win.
We had a comment, we've got a couple coming up, but one right here. Who's got the mic? This gentleman. Oh, yep. 1, then 2, then 3.
Brent Finlay, and I came today from the National Farmers Federation very much to sit and listen, but there's a number of comments have been made, and appreciate the discussion that's going on, and even the last one around all the money that's sitting in the superannuation funds. And I was in the National Party room in Canberra on Tuesday morning talking about exactly this, not about bonds, but about how we can actually mobilise some of that money in the super funds. 1.9 trillion, I think, sits there at the moment. Less than 0.3% of that is actually invested in Australian agriculture. Some of that's around regulations, which what governments can actually deal with. Another comment before around branding, and we're partnering with the National Farmers Federation with MLA around True Aussie. True Aussie's in 12 export markets right now. It's an incredible brand that is in red meat, but we're looking to see if we can actually do a pilot to take True Aussie right across Australian agriculture in those export markets. So that it's a great opportunity. It goes with a lot of what we do, and I've done. I chair the National Trade Committee, is around the FTAs that we've talked about today, and how they've actually come into being. And the big one is around getting the China FTA ratified, which happened this week in Canberra, so that's significant. The other comment about industry bodies, and there's about 60 to 70,000 farmers sit within the NFF family. There's 30 industry groups there, and talking about trying to pull that together, and Susan's made the comment about that. What I'm trying to do and what we're trying to do now, there's had been 4 attempts at making one national body for agriculture representation in this country. We are, over the last 2 days, we're now further advanced than at any other time in trying to pull that together. So we are working on that, trying to get one voice, because we have lost our voice. The great thing about the outlook for Australian agriculture at the moment, and we've been communicating with the Prime Minister's office today, when you go to Canberra, we hear the Treasurer talking about agriculture, we hear the Finance Minister talking about agriculture. Agriculture is the new black, and we're going to ride that wave. The window is open now. I'd be interested from the panel if they had a comment about how long they think that window for investment in Australian agriculture, particularly from China, how wide is that window?
Can we just a very quick response, maybe at the start from the end? And
well, again, I'll default back to the fact that I'm a lawyer, not an investment person, but it comes across the desk, and these foreign investors keep asking me for assets, so they're misinformed if they think they'll get that from a lawyer. But anyway, my personal view is we're probably... So my experience has been 5 years ago, foreign investors were asking, all the time about red wine. Then it's become 3 years ago almonds, now it's beef, and it will continue to go. It's going in cycles as appetites and demand for things overseas increases. My personal view, not an economist, is that we're just on the cusp of it. We are just beginning to see the awakening of interest overseas, and I think everyone says that we're on the cusp of a dining boom. I think it's real, and I think it's a generational thing. I don't think it's going to... the demand for food will continue, so...
Great. So on the cusp for you? Yep.
Just a brief comment. I mean, we don't see a lot of, and Tim's more specialised, in this area than me, but in a listed sense, you don't see a lot of quality opportunities necessarily. But I think there is a very strong demand from the institutional market for quality listed agriculture broadly. We're seeing very early signs. There's something we're doing at the moment, which is the listing of Wellard, which is the live export operator out of the West, long-term operator. It will be very interesting. I'm not going to comment on, I guess the prospects of that particularly, but it'll be very interesting to see how that's accepted by the Australian institutional market and offshore, and how that performs, I guess, as a listed entity. It will have its critics because of the nature of the industry and the variabilities of it and the risks around it, but that's a good example. That is definitely taking advantage of what we're seeing in terms of the uplift in broader meat commodity markets and what's happening out of Asia and particularly China. So my first reaction was that I think the window's only just opening, so there's going to be enormous opportunity.
Great. Well, we're just about to start eating into drinks time. So in a nutshell, the window.
I agree with both comments before.
Brilliant.
I fully agree, but whether it changes from China, I think as Susan said earlier on, it's a cycle. Someone moves out who doesn't like the space, and if the sectors are profitable, capital will flow there if it's presented correctly. So, and it might come from the Netherlands, it might come from Africa.
Great. And the window for you before we move over?
Look, I'm excited, I'm pumped, and I'm thirsty. But it's only just starting, and it's pretty obvious. We've had old world demand for food products growing at about 3.5% or something in the last couple of years. Emerging market demand by volume has overtaken that, and it's growing at 7%. And supply's never on the aggregate growing more than 3.5%, 4% kept up. So that's all you really need to know. Australia needs to ask, what have we got a natural competitive advantage in? And one word, and that's parity. And Rob McConnell, Deloitte's, said somewhere recently about the single biggest thing everyone's underestimating in those free trade agreements. So hats off to everyone involved in that. I know there's a lot of parties for getting that done, and everything has to go to parity now. So I look at Ben's beef price, and I don't know where global parity is for the Eastern States Young Cattle Index, but I assume it's $5 or $6, right? So we are entering a new normal. We are entering a phase where we've never seen anything like zero interest rates, and 20% of the world's bond markets have a negative real interest rate. So maybe 2% is a good return now in today's world. I pitched to bond guys, and they think 5% is a high yield investment. And I think, we should be excited. We shouldn't be sceptical. I know it's very hard and it's very difficult to say it's different this time, But I passionately believe it is different this time, and it absolutely is in terms of interest rates, cost of capital, and it absolutely is in terms of just this wave. And it'll have hiccups and slowdowns, and all the sceptics will say it's over. But if you look at America over the last 100 years, it's had 25 recessions, a couple of depressions, and everyone said it was over. It'll be the same. They're buying opportunities. And the other thing is this money will be bipolar. It'll come and go at various stages, and that's going to create a lot of opportunities to be counter-cyclical there as well for entrepreneurs and take advantage of that. So I think it's never been more positive, and I think we've got a whole new wave of new farmers coming through, which will be innovation uptake and uptake of all these financial products. So we're in the hot seat, and we'll get it together.
Okay, so the window's open for you. Now, we had a couple of people
and the bar.
A couple of people in the audience. So unless have you got something that we haven't already heard, something really out of the box? Yeah.
No, not really. But
okay, well, you can sit back down.
I never do. But just one thing on the bond thing. We had a meeting the other day with ASFA, and there's $21 billion in lost super out there that I think's a perfect opportunity to really put some weight behind to go and get that invested into an infrastructure / agri. Because they need an answer for it. Just coming back, I think everything's that we've discussed today is fine. I sit there and look at it and think, well, there's money that's wanting to come into the sector. There's obviously technology issues. There's government lobbying, all this sort of stuff. And if we can get all the parties together, that's all great. And hopefully all this will happen. There's the one thing I think that's is in my mind, anyway, unless I've completely missed it, is the inefficiencies in the sector which are linked to small producers and small farmers. That I know we sit there and say, I'll put them all together, you get scale. I think there's got to be analysis done so you can sell that dream to investors to say, if you get a collective 50,000 acres and this many cattle, you can go direct to this place and you get this price. Like, until there's an answer and it's a known fact, then you can start selling the dream, both to producers, because I know there's an emotive thing about getting off your farm or doing whatever, but if people start to know that by joining forces or selling or doing whatever, you can go directly to X company in China or create X brand. But until that actually is known, I think it's the same as James Walker this morning said that 30,000 acres costs $1 million to reach. Like, that sort of analysis to go to smaller producers and say, well, if we had a minimum of X, this is when you can get this sort of scale. I think that's the only thing missing. If we could get that and then bring everything else together, perfect. But well done, James, and well done, team.
Thank you very much. Final comment from Sean Hendy from Colliers.
Yeah. Just in summary, what we hear about agriculture more often than not, and one of the reasons we're here for today, is one of the bad sides, which is drought. There are a lot of positive things happening in agriculture. So if we could go away from here today and put a positive spin on why we're here for a bad reason, is that we want to raise capital and we want to grow in the oncoming fantastic growth future that we can see that agriculture in Australia's got.
Thank you. Has it died? The battery died? Or? Are you finished?
Finished.
Okay. Now, there was one comment from the member for Gregory. Although I work for the ABC and we've already had one LNP person speak, I'm not sure if it goes against my grain to allow
Thanks,
another.
Nicole. It's not a political question. It's something that I went through personally myself. And
Lachlan Miller.
One of the biggest issues we have in farming, I think it's a white elephant, is farm succession. Sure, we talk about branding, we talk about finding new markets, bonds, superannuation, but to get our next generation of farmers going through and for people to continue in farming is that we've got to deal with the real issue, which is farm succession, and is moving the baby boomers, which my father was, into retirement, into a comfortable retirement, and to have someone in the family, whether it's my brothers or whether it's a cousin or niece, to be able to take over that. I mean, I think that's not one of the number one issues that we need to deal with is farm succession. I don't think we need to deal with. I don't think we're dealing with it very well. I know Deb Frecklington, our member for Nanango and Shadow Agriculture Minister, this was something that she was passionate about, and I'd also like to acknowledge Jan Lay here from the member for Warrego as well here. But I think farm succession is something that we aren't dealing with very well at the moment, and I'm just wondering how we need to do that.
Simple. It's that succession will come with the new generation getting access to capital in some form, and our sort of money wants to back those sorts of people, and we've been involved in some of those workouts where we've identified the son who's normally mid-40s and he has a track record, and we can verify 10 years of actual financials, and we can overlay them on a earnings per arable acre or something if it's cropping. And we're very happy to back him, and it's provable. The investors love that because they can actually see what he's done, and they can see the target asset that normally isn't doing so well because different management. So that allows us to actually joint venture with him and pay him like a banker, and he can then afford to buy mum and dad out and brothers and sisters, and if there's more houses, they can stay in there. So that's all part of this solution which we're involved in right now and very, very proud of. And the investors love that as well. They're providing capital. So I think, just to summarise though, it's going to be a bond-type instrument because that's the obvious place to look for capital. Otherwise, we're competing against real estate and infrastructure and all these renewables and whatever. So if we can actually put together a bond, we know that 20% of the world's investors, and that is the biggest market in the world, have a negative yield, right? So we don't have to promise them too much, and particularly if that's somehow pegged to a commodity or something, and then it's an inflation-adjusted bond, and that's nirvana for a bond investor who knows he's going to lose money. And to be perfectly frank, these bond investors are going to ruin civilisation long before drought and climate change because they're investing our savings money into zero coupon bonds. And if we get 1% inflation, everyone's ruined, right? So society will be much better off if we do this.
Great. Thank you. Okay. I'm sorry, Deb.
I just wanted to say, Lockie's made a really great point, and Ben touched on something that he's been very passionate about for many years, which governments need to get behind. So if any of you have any influence on the current government, or hopefully the next government, which will have very soon, is in relation to stamp duty transfers. Because I was a rural succession lawyer before politician, and in New South Wales, they have those frameworks. So that's a very simple thing. We can move into the bond fund that Tim's talking about, but some family farms, to keep it within the family farms, that's a perfect example of how governments can intervene by giving stamp duty relief and by transfer reliefs and such as things, such as that. So Ben did touch on that before, but it's a great one to lobby us about.
And on that stamp duty issue, it's actually a national issue. Every state is different, so we need uniformity. But for us, we raised $500 million into a vehicle.
But the uniformity should be exempt.
I'll let you guys...
Sorry, this is very important for everyone in the room. The uniformity needs to be across states. So at the moment, we raise a vehicle and we raise $500 million, we're going to spend that, and we do a second raising in that vehicle, and it's the lowest cost, most efficient way. Well, more than, in some states, more than 20% change in ownership triggers stamp duty stuff, and the investors overseas are going, this is just nonsense. It needs to be sorted out, and particularly if we have a swing to the right and we have right governments in states, that is one of the single biggest issues of impediments of capital is actually that element. It's not necessarily the cost. That's bad enough.
Yeah, we are going to have to wrap it up.
Yeah, I won't take long. I'm sitting here feeling a little bit guilty. There's some people come up with some very good ideas about legislative change, and it harks back to Susan's point about uniting on this. But there are definitely laws in Queensland which cost us investment as opposed to other states or have in the past. For example, there's a peculiarity in our land tax regime which I know sees investors from overseas choose other states without investing in Queensland because they don't. It's just simply more profitable to invest down south, which is a crying shame. And there was another restrictive law which prevented certain types of land being owned by corporations, harked back for 100 years. A lot of family farms now are corporate owned, and that doesn't mean a Coles Mire. That means for succession planning we have a corporate structure. It has changed. I'm coming to it, But everyone in George Street talked about that, on one side of politics, talked about how bad that was, and we all knew it needed to be changed, but it was only the Deb's government that's now gone that actually changed that. And I can assure you that was a law that prevented investment into agriculture, and investments have gone ahead because one government finally had the courage to do what everybody knew should be done.
Okay, thank you. I'm afraid we're going to have to wind this part of the day up now. We've got two more things.